Hey, what's up, guys? Alan here with EatSleepTrade.net. We're going to be going over the short play that we did on Friday for RXII. I've got a couple questions of people asking, hey, how did you know that you should short that and it wasn't going to be a multi-day run? And then also, I talk a little bit about GERN, another runner that also went parabolic and looks like it could be getting ready to give some of that back and start to head back down. So sit tight, stay tuned for just a second, and we'll be right back and get into both of these charts. Alright guys, welcome back. We've got the daily chart up here for RXII, and let me show you where I even found this stock or got the idea that it was something that could be shortable. And I pulled it right off of Finviz's front page. I check these top gainers all the time, especially right now with the biotechs being so hot, and it seems like there's a new one that's running every single day. And I believe a lot of these companies are taking advantage of the hype that's involved in biotechs. It's pretty simple for a biotech stock right now to run a couple PRs and get the price running up when the entire sector's hot. So basically, I just come right here to the front page, look at the top gainers, and go through these to see which ones possibly could be setting up for a short, ones that are overextended, going parabolic, making moves that are unsustainable, moves that have to give price back. They just can't hold that high. And one of them right here, first up on the list, is AMRN. And RXII was on this list as well when I seen it. And I'm sure you guys, if you're on Twitter and all that stuff on social media, have seen tons of people getting ready to short into AMRN, which is a good idea. The longs, the chasers, the bag holders, the investors, the believers, whatever you want to call them, they are what caused this thing to run the way that it does. A little bit of news, a little bit of promises, and a little bit of hope, and next thing you know, stocks are flying out the door, and people just keep chasing it higher and higher. Early shorts tend to jump in. They intend to set their stops way too low and end up just getting squeezed back out of their position. More chasers, more believers see the price going up from this tiny little begin of a squeeze, and then they chase it higher, and the cycle just continues and continues until eventually people figure it out that maybe I shouldn't keep buying this, and it comes crashing back down. And that's when you want to be short, right at the top of that move. So RXII was on this list right here when I first put it on my watch list. And I've got two watch lists here. This is my watch list for my swings, and this is my watch list for my momentum plays. So anything that I may go long or short as a day trade. You guys can see all these. They're all momentum plays. ADXS, OREX, ONCY, AXN, RXII, GERN. Pretty big one right now that we're looking to see come down. But so let's look at RXII here and look at what we want. These typical, I guess these pump and dumps are companies with bad fundamentals. They're losing money. They mostly don't have cash. They got no revenues. They've got no equity. They're just they finance their projects or make money off of dilution, shares, selling shares to people, all this kind of stuff. And basically, they're just companies with bad fundamentals, but they tend to run really hard or go parabolic on news or PR releases, aka a pump and dump. So here you have RXI, and just looking at the daily chart, you could see it's had a few good runs. But every time it's had one of those runs, it tends to just give the price right back. Another good run right here, and you see the huge slam. Anybody who bought in this run up believed or thought something was happening, it slammed back down. So let's zoom in a little bit right here. So these two lines here represent when RXII presented at some big event. Don't really care what that event was, but right here on January 12th, they presented, at a whatever it was, and look what happened to the price. It dropped. Those presentations mean nothing. Just because a company says, "Hey, we're presenting in 2 weeks at this area, buy our stock right now because after that presentation, we're up and running." Here's another time where RXII just presented again, right here on March 11th. And as you can see again, it did not help the price at all. The only thing that happened is chasers, bag holders, believers, whatever you want to call them, bought into this thing expecting it to continue breaking higher based off their presenting at some event. Okay, so let's look at why I shorted RXII. All right, so if you guys follow me on Twitter, then you've seen my tweet where I said, "Hey, I'm watching RXII for short opportunity." And then just a couple minutes later, there it was. RXII, I'm giving it a shot short with my risk at the high of day. And then, not too much longer later, look at that. RXII worked just as planned because these stocks do the same thing all the time. Okay, so let's look at our 5-minute chart here from Friday. So look what happened. We opened up, and what happens? The stock just starts running. It goes parabolic. It's a move that's unwarranted and unsustainable. There's no way that this is just going to run out the gates and no big deal. We should be able to hold this up and continue forward. You get a pullback, and then what happens? People come in again, chase it higher. Everyone thinks, "Hey, look at this new high day breakout." And what happens in the next 5 minutes? The price slams right back down to where it started. Whenever you see a large green candle like this that closes all the way at its top, followed by a red candle that gives the entire price all the way back, that's bearish. You do not want to be buying into this, especially in this area right here, which is right where I got short. When you have a huge green candle and it looks like it's going to break out and immediately gives that entire price back, momentum is gone at that point. So basically what we did is we got short. I got short at 142. So you see, I'm not at the top or anything like that. I didn't get a 148 or 146 short. I got short at 142, and I was basing this off risk up here at the high days around 150, and that's what we were waiting for. And I held it up, and as you guys can see, this huge volume right here that came in, 183,000. So large volume relative to all the other volume around. And this candle completely failed to close at the high of day, meaning as people were buying it on the ask, people were also selling it to the bid and getting out as quick as they could because they knew the run was over, the momentum was gone. And this is exactly what you want to be getting short into, especially once you have your pullback. You see this rejection right here, and then a failure to break to new highs. You can get short all over this with your risk at the high of day. There's no reason you can't get short and have your risk right up here. You're risking less than 10 cents at an almost guaranteed play that's going to clap. It's overextended, it's unwarranted, it cannot hold this type of price action. And sure enough, just about probably 30 minutes later, there it went. RXI rolled over and gave it all back, and here we are back at the low of days. I got covered at 114, and it was a great play. It was simple, straightforward, and I didn't even watch it. It came up. I found a risk, right? You have a risk set once you start establishing some resistance up here. You've got a failure to continue higher off of huge volume. That's when you want to be getting short into this thing. Even if you want to play it really safe, you get short when you break support right here. Here's where you're getting short. Still plenty of meat on the bone to get short. So that's what I saw on RXII, and that's why I got short on it. We took it right off the front page of FinViz. I seen the huge bar. It ran for no reason at all. It just did. And that's what you want to short into, stocks that are running for no reason, because it's just that there's no reason for it. They're not going to stay up there. It's unsustainable. Uh, Another one that we are looking at right now is GERN. And I've had a couple people ask me about this one as well, and why I think this could be a top, or what I'm watching for and why I want to short it. So the first thing we're going to look at is the daily chart. Um, do you want to be the person that's buying into this huge spike only to have this happen to you? I don't think so. These are people who believed in this. These are people that chased it up. These are people who, they bought it in here and up here. They're like, I've made so much money. I'll never sell this thing. I'm making so much money. And the next thing you know, it's all gone because they didn't take profits. So GERN, GERN has been on a nice, uptrend channel here, coming up nicely. You can see this top of the channel has acted pretty good as resistance, as well as here, and we're getting to that area now. We're right up into that area where we're running into heavy resistance. You're going to see this thing start to run out of steam, and you're going to see history repeat itself. Look at the big run right here. Tons of volume traded this day. And what happened? It slowly fades away, right back to where it started. Anybody who bought this, they eventually just sold out for nothing or slight profits. Same thing again. Here comes your volume coming in. The stock runs up right up to the top of this channel, and then it gives it all back, all the way back down to here. It gave all that back. So anybody who bought this breakout and held long, people that aren't swing traders or day traders, people that are believers, investors, bag holders, they have tons of names for themselves. They're not making any money on this. And now, here we have it again. You've got a combination of early shorts getting squeezed, chasers, bag holders, believers running the price up for no good reason. I think this one's running on the potential chance of a buyout or something like that. Either way, you got a company whose fundamentals are horrible, and it's running solely based off news, PR release, speculation, whatever. It's not what you want to be trading on. Okay. The next thing you want to look at when you're momentum trading, because you're day trading momentum trades, you could swing trade these shorts sometimes. It gets a little bit riskier. You need to have stocks that have a lot more conviction, and exactly why they're running and that it's not going to be sustainable. But for the most part, we're just looking to get the large part of the pullback, and then that's it. And then it continues to fade away from there. So let's actually look at the 15-minute chart for GERM. So here we go. Got a nice rip, consolidates, nice rip, consolidates, and continues to grind up, forming this obvious uptrend over the past 1, 2, 3, 4, 5, 6 days. So we've been trending up for 6 days, and look what happened here on Friday. We had a big sell-off from the highs around 450 back down to around the 430. So you get this big sell-off, and then you start consolidating and creating a wedge right here. So let's get smaller. So we've broken our uptrend, right? We've had a nice strong uptrend for 6 days, and now it's broken. So let's zoom in a little bit here. We'll go to the 5-minute chart. So again, here's just another picture. The break of our downtrend, the break of our uptrend, and then the consolidation. Okay, we've got a nice wedge right here. Even after hours, we actually started to come below that wedge. So pretty interesting. Now, when this area of support right here is broken and you start getting candles closing below that, you're confirming a new downtrend, right? You've broken the trend, established support, pulled back, and now if you break this area of support, you're establishing a new trend. And your trend is going to go somewhere like this if, per se, it just kept going down on Monday. So this is what I'm looking for when I'm trying to find the top to these stocks that are momentum plays that are running for no reason. They're running from bag holders, chasers, believers, early shorts getting squeezed, a combination of all those things. So I'm looking at multiple time frames, the daily chart, the 15-minute chart, and a 5-minute chart. So 3 different charts, and all 3 of them are telling me, hey, this thing could be going back down now. It could be ready to head back down. Now, very well, when we're watching this wedge coming out on Monday, this thing could come right into this wedge and break out of it and continue up. Absolutely. But when it comes to this wedge and we start breaking below it and we break this area of support, that gives us an area to get short and have a manageable risk where we know, hey, we don't want to see it break back above this support area. If we fall through support, we want to see it turn to resistance, and our stop out could be above this area here. Alright guys, so that's going to wrap it up for a little bit into why and how I shorted RXII, a little bit into how I find some of these momentum stocks, and a little bit into GERN and why I think it could also be ready for a short. So if you guys have any questions or suggestions, please leave them in the comments below. Don't forget to like and subscribe for future videos. Also check out our website, eatsleeptrade.net. From there you can follow me on Twitter and check out the forums to stay up to date on all the stocks that we're watching and trading. Alright, thanks for watching guys, and we'll see you in the next video.